resource or website to find those statistics, like income, population, etc.?
Yeah, the Census Bureau has all that. ACS, which is the American Community Survey, that's a little bit more specific. You can get that information from a CoStar report, so you can ask your broker to pull you a CoStar report too. But I also like to look at it myself from the government website, because CoStar is not always the most up to date, especially if it's changed recently.
Yeah.
Brian will laugh. CoStar is like the real estate industry's like bane of our existence, but something we must all subscribe to, unfortunately.
It's like the Zillow of commercial.
Exactly. So-
Residential,
No, meaning that the Zillow is to
Yeah.
residential,
Okay.
CoStar is to commercial.
right, yeah.
Still okay, not.
Lisa.
completely.
Andy, if you go to, like you said, the Chamber of Commerce site for Jackson, they commissioned a report because the census came out after the Blue Oval information was announced.
Right.
So they had a study done by a local firm called, I think it's Younger and Associates. And they did have some income information in there. So they're predicting a rise, an
Right.
uptick, of course, in that income for that census tract.
Because now you have all these,
Mhm.
solid manufacturing
All this
jobs,
stuff coming.
the white collar jobs to
Yeah.
support that. We have another question here or no?
No.
Oh, okay. So yeah, that's just like the general overall market stuff you want to take a look at, right? The next thing I'm going to do, and I'm not going to bother everybody with looking at all the comps that I looked at, but I looked at a bunch of different comps here. I was trying to figure out what's going on in Jackson, kind of the highest rents. I did pull up this one. So 15 Bryanfield Cove was just kind of looking at the pictures because I didn't have any of the pictures. This one looked to be an unrenovated unit. So the story with this property too is that about half the units are renovated. When you're doing a full underwriting, you're going to want to know, okay, which exact units are renovated, which ones aren't. This one looked like it wasn't renovated. So you also want to just see what the current property manager is doing and listing those for, right? Because one of the stories that I think people always tell when you're trying to buy a building or buy an investment property is, oh, there's so much value add potential here. You can do all these things to add value. The owner was just really hands off and they didn't, manage it well and they were leaving money on the table. And that may be true, but more often than not, it might not be true because no one really has an incentive to not lease up the units for as much as they want to get and not, put as much, effort in trying to get the vacant units leased out, right? So if there was really such an easy story as you can walk in and then all of a sudden I'm going to raise all my rents from $800 to $1,000, it's probably not that simple. So you're going to want to take a look at kind of what the are we running out of time here?
No.
You want to back up?
Yeah.
Yeah. You want to take a look at what the property manager is currently renting some of those units for. I had that up here in one of my 1,000 tabs. Oh, here. So found out the properties being listed by this group, rentals and renovations. Some of the properties they have here, I heard chuckling. Lisa might be familiar.
Yeah, she is, we are, yeah, we understand.
So you're looking at these. I've got 15 Bryanfield Cove here. That's one of the vacant units that I saw on my rent roll. It looks to me that this is probably a renovated unit because it's got all hard flooring everywhere. It's not, as you can see, it's like obviously not the best pictures, right? So there's probably some management play, like without me having called the management company, without me knowing anything else, just looking at a couple of these pictures, I'm thinking, okay, maybe this is not like the best property manager out there, but they do seem to be doing the renovations as well. I don't know, guess by the name, but so you'd have to figure that out as well, right? As you go further down the due diligence, like who you would want to have be your property manager. But that's definitely something that, okay, I'm looking at this property here, this 15 Bryanfield Cove number 3, and I'm thinking this is a renovated property. It's renting for $925 for this 2-bedroom, 1.5 bathroom. And if we go back And if it's not working, it's okay. But if you go back and look at the rent roll, now I'm gonna go look at, okay, this is what I perceive to be a renovated unit. They're asking for 925. If they could ask for more, they'd probably ask for more. And if they could lease it up, if we go to the rent roll, if they could lease it up, they'd probably want a little bit more money out of it. So if we, and then this other one here, I saw this 2-1 Tinker Hill Code fee I found on the market for $875. So I'm looking at that and saying, you know, the broker projected rent maybe $950, maybe not sure. If you scroll all the way up, I pulled out here then the unit mix, and I'm trying to kind of calculate a little bit more in depth some of this stuff. You know, here's the unit mix: 29 1-1s, 495 2-1s, 16 2-1-5s, 3 2 of these 3 bedrooms. The average rent of this is this. The average rent of the lease units is this, because this is a lower number because this includes some of the vacant units, right? I found the most expensive rent for each one of these floor plans and at the latest lease date. So, you know, some of these just leased up in March and they were getting about 800, 950. Well, this is the most expensive one that has ever been done. And this is the latest one, which I try to give priority to the latest one of what I think I can get, because, you know, we have had a correction here in the market, right? Things have softened a little bit. So I'm going to be giving priority to these latest lease rent numbers when I'm trying to plug that in to my underwriting to try to figure out what's actually going on here. If we go to the cash flow, so talking about kind of the stuff that Brian was mentioning.
You guys can all see this real clear, right?
It's super clear. And Joanne has the Excel file, and we can distribute it after this call to anybody who wants to like dig in a little bit more. But they gave me this T12, which actually wasn't T12 and it was only T11. So I took the sum. Well, that was their sum, but I averaged the remaining 11 months. And so I got that number to create a 12-month estimate. So it rolled down to a certain number down there. Then if you scroll a little bit further, if we can scroll down a little, just to see kind of this number. So I'm seeing, okay, their estimate is about $4,700 a unit in expenses here, 35% OPEX ratio. I feel like that's a little low. I'm trying to look at where might that be a little low. You've got management fees of $900 a unit.
That rate, that's kind of why we're chuckling a little bit.
Yeah, that feels high, right?
That's way high.
But so this, and for a good job putting up like crooked pictures the whole time, right? So there might be a play there of actually like trying to bring in some institutionalized management, some better management. Insurance feels pretty good. The taxes may or may not be low. You have to take a look at the area for that. I do think that this number is a little bit low if you're trying to upkeep the property into good condition for all the repairs for a 1980 unit building, plus all the, you know, pest control and landscaping and all this kind of stuff. That's probably a little low. You want that number to be higher. So I'm looking at these, and once you get really good at analyzing all these, you kind of get an intuitive sense. Okay, this number's low, this number's high, this number's low, this number's high, right? And that's going to help inform you what you got going on. This on a T3 annualized, on a 6 cap, it got to the 14,851. So if we're thinking more of a 7 cap, obviously that number is going to come down, but okay, feels pretty good. Looking at a little bit further information, and this is public info, by the way. I'm looking at, here's the sale date. So talk about what Brian's talking about. I want to go figure out what the story is of the seller too. I'm going to believe Brian, but I'm also going to like try to do as much investigative journalism as I possibly can. So I found out, okay, here's CoreVest, American Finance Lender. And for those of you who are unfamiliar, CoreVest is kind of like a debt fund, closer to a harder money loan, but not quite all the way there. And you can call them and you can figure out, hey, what's your current pricing for loans right now? CoreVest, depending on the property, you know, you're looking somewhere in the range of SOFR plus 400 to 500 for kind of a bridge loan, which is probably what was originated here. So, and I've got the loan amount.
It was a bridge.
It was a bridge loan. So I know, okay, they're probably doing an interest-only loan of about 9 to 9.5%. And that's just because I know who this lender is, or if I don't, I can call them and see what their current rates are. And I'm pretty familiar with this type of product. So what I tried to figure out roughly is, okay, so what are the seller's carry costs? Because I'm trying to see here too, like how much negotiating leverage do I have when I'm trying to look at this deal? So if they've got a $9 million mortgage at a 9.5% interest rate, their interest only payment is $855K a year, which is a monthly payment of $70,000, right? And if you go back to the T12, you see a lot of the past months, they were actually net negative cash flow, right? So that tells me a story because it probably there was a lot of lease up. It looks like there was to do. The income in the first months of the T12 were pretty low. If you scroll down a little bit here, so talking about trying to dive in a little deeper on taxes, you can go pull what the property tax millage rates are from the controller. So this is all public information. So it has the full rate here. So for city of Jackson and Madison County, here's the millage rate. So I just go back here and I think I cut off a little bit here, but functionally I said, if I'm buying this building for 11.5, I get reassessed this 40%. We're getting in the weeds, right? But you want to figure out exactly what your taxes are as much as possible. That's also public information. I have one more thing to show on this page. Go ahead, Brian.
One quick note on that too,
You can scroll up.
is in Tennessee, your taxes, they go by county,
Mhm.
and then you have to find out from that county whether they reassess at the sale of a property or if it's like every 3, 4, or 5 years, right? Because if it's at the sale of the property, that's going to make a difference when you're underwriting it to determine,
Yeah.
what that's going to add, expense is going to add. So,
And I usually like to assume they're going to reassess it. Even if that's not true, you should call to confirm every time. But I usually like to assume they're going to do it because the next buyer probably is also going to assume that they're going to do it. And if they don't reassess it at the sale of the property, then great, you have extra cash flow. But that doesn't necessarily mean that that's going to help your valuation on the next end, because this all is reliant on the next buyer believing all of your numbers too, because they're going to have someone digging into all this stuff, trying to analyze it the same way and be conservative on that side. So I usually like to have, if there's a property tax delta, that's like extra cash flow, but doesn't necessarily help my value.
so real quick, we've got about 7 minutes
Okay.
left.
Yeah.
So I don't know if you wanted to talk about any of the affordable housing in the last few minutes, or
Yeah,
we can continue.
I'll finish
Go into
this
this,
and we'll click on 1 or 2 things, and we can
Okay.
talk about that. So this is just an interesting thing that just as a thought exercise. Let me try to figure out what they've done here, right? If they bought this thing for 9.7, that's public info. I'm going to guess they spent 1% on closing costs. That's a guess. Their mortgage costs of 180. I know Corvest usually charges 2 or 3 points to originate the loan. So I'm going to guess they cost 180 here. This is at 50% of the units. I'm just guessing they just put down flooring and some paint. So $6,000 a unit. I don't know if that's true or not. This is just all a guess. I'm saying 400K here. Cost them $855 in carry costs. That was the mortgage interest payment, right? For a whole year. They had 600K of net positive NOI, at least according to their T12. So that's negative cost, right? Because that's income to them. So I'm coming up to, I guesstimate their cost basis is 10.6 million here, which, it puts this deal at a thin basis for them. If they're selling at 11.5, their selling costs are, this is 4%, which is maybe a little high, but depending on how much they're paying a broker or not paying a broker, 460, and then net is 374K. So that does tell me that this deal is probably pretty thin for them, right? Because if all of a sudden I offer $11 million, maybe they're not even making any profit. And this is before they're paying any of their equity partners, right? So just an interesting analysis to look at. Whether or not this is true or not, I don't know. But based on some basic assumptions, you can kind of figure out with publicly available information what the seller is looking at in terms of their bottom line, and that's going to help you with your negotiations.
So Andy, what would you offer on this property?
I probably, well, we can just quickly look at this underwriting here, and then talk about the affordable thing that Brian mentioned. And this will all be in the model that you all get. So there's a bunch of assumptions in here. So I assume some rental costs, assume some CapEx stuff. I know this is a lot. This is actually a free model that you can download online from adventuresandcommercialrealestate.com, one of the best sources. And that's all described. I got links to that all in this document too. Essentially, my valuation is lower than 11.5 once I run through all the numbers here. I think it's worth taking a look, and I put in a bunch of OpEx assumptions based on the tax information that I saw, based on the new rent information that I saw. So that's all in here. I won't bore you with the details because we've got to wrap this up, and I've spent too much time talking. But I think 11.5 might be a little rich in my perspective, which, you know,
I agree with that.
that's disappointing for the seller.
Just a quick question.
Yeah.
When you underwriting a deal, how far do you go with the T12s? Do you go past T12s or what do you?
If it's a stabilized deal and they've had it for like 3 or 4 years, right? I do want to look at, and they send it to me, I want to look at a couple years ago too, because the seller is also incentivized to like have done a lot of the operation stuff a couple years ago, and then the last year, you know, they do as little as possible to make it look as good as possible, right? So if you have extra information, you want to look at it, but when it's not stabilized, you know, your T3 analysis and just your baseline assumptions of what it's supposed to be, you're gonna have to look at that too.
So last thing I'll say real quick, and we gotta quickly switch gears, is with what he said when he's looking at the debt on it. And he was like, yeah, I know Corvus, maybe they do bridge. That tells you a lot, right, as an investor. Because if he had to take a bridge debt on this, he took a bridge debt, that's gonna be coming due. So he's gonna have to do what? One of two things. He's gonna have to refi or sell. And if he got a nice, 4% rate, now all of a sudden he has to refi into something that's gonna be like 7. So do you think he's gonna refi or is he gonna sell? He's gonna sell, so which gives you, as the investor, leverage. I mean,
Yeah.
I'm the broker on this deal, but I'm telling you, telling you the honest truth, right?
He's gonna be a motivated seller because he's paying 9.5%. And he
Exactly,
wants a 1031, so he's running out of money and time.
yes, fast.
So
Anyway, so if you ask me what price,
we have
yeah,
a
anyway.
we have a lower number in mind, probably.
Yeah, so,
Yeah.
but anyway, go ahead with the affordable housing.
Yeah, the last bit they asked me to, and Kunal asked me to briefly touch on, you know, affordable housing, the importance of affordable housing. I know you mentioned at the start that you usually don't have usually have a charity here. Didn't have one today. I'll plug one. Habitat for Humanity is a great one here in town. They help people get into homes for the first time. We're actually sponsoring a build day for that in a couple of weeks. So I didn't know
Yeah.
this plug for the charity. If anybody wants to help volunteer, we need about 10 more volunteers on Friday the 23rd. If anyone's interested in helping build homes for families in need. But one of the interesting things about affordable housing is that at the end of the day, and this whole industry, and I really like how the Trumans have made this about, you know, you're trying to improve your standard of living to be able to give more too. When you're in this business, multifamily business, I mean, you're providing people with a home, and you have to keep that at the core of what you do. Otherwise, if they start to become numbers and just I'm just trying to squeeze every single dollar out of them, there's a human element to this business that's different from if I'm renting to just a business or I'm renting an office space to a big law firm. You know, to a big law firm, you can pay me as much rent as you possibly can, and I'm gonna try to negotiate really hard. But there's, you know, when we're thinking about renovating and thinking about increasing rents for people, that there is a human element on the backside too. So you can, like, buying a property like this is what we would probably consider naturally occurring affordable housing, because the rents are pretty cheap and people who are making not a lot of money can afford to live there. So one of the things you want to consider for that is, do you, for longer term tenants, like, maybe do I think about letting them stay at their lease price, at least for a year, give them some time to recalibrate, and investing in that business in general. There's a lot of incentives about it as well. And different governments are going to have different ones. In Metro Nashville, there's pilot programs where you can get tax reductions, property tax reductions, if you invest and maintain affordable housing. There are things like low-income tax credits. That's something that Joseph and I spend a lot of time trying to model for our clients. Those are very complicated, and that's really, really in the weeds of how to get all these different allocations and stuff. But it is a very worthwhile investment to think about, how do I preserve and keep opportunities for people who, you know, are often really working class and serving all of us every single day in their occupations, and being able to provide stuff for them. There are incentives around that in different municipalities that can make that a really good business as well.
Very good. Appreciate that. So, yeah, affordable housing is very, very big, I think, a very big topic in Nashville itself, because of, you know, what you've seen rent growth go through in the last few years, right? Yeah, and Habitat for Humanity, yeah, they've been here as one of our,
Okay, great.
yeah, so they're, we know the Williamson County, the lady runs Williamson County, we know her real well. And so she came and talked about, you know, their charity and what they do. So yeah, so the 23rd,
Yes.
what time?
7 a.m.
7
on
a.m.
Friday.
All
Out there
right.
swinging hammers if anybody's.
Yeah. And where?
It's a lot of
Where's
fun.
This is the Davidson County one.
Okay.
So
Yeah,
it's
that's fine.
it's in North, I think, off Richards Pike.
Okay. Cool.
So
All right.
if anybody has interest, I'll give a sign up link to that after this
Okay.
too.
All right. Well, we appreciate Andy
Thanks,
coming.
Andy.
Thanks, guys.
I